No, I'm still in that same camp. I mean, in the very minimum, I think 25.5, I still have about an 80% probability that we'll get to that level. And if we just take a look at the chart, you can see we've just been meandering in this beautiful kind of
Yep.
consolidation phase, right? So it is a bearish channel. I mean, let's be clear on that, but that doesn't mean we can't go up a little bit. And if you look now, the high end of the channel is crossing right at that pink trend line, which is actually that 25.5 pivot low from the Terra Luna collapse. So it makes a
Right.
lot of sense to me that we should see one more push up right into that level. And then the question is, can it break that? And that's going to be the tougher scenario for Bitcoin to get through that 25.5. And then if we, again, and I think we'll look at Ethereum in a little bit, but Ethereum, like you said, is bouncing around this level of resistance. But I do think there's a chance that you could get up to that next one right around 2000 if
Mhm.
Bitcoin can make that next move up. So I think for the most part, I'm still neutral to positive. I think that you have a Fed that's on hold. You're likely going to see a reduction in or inflation numbers are going to come down. We've seen commodities really come down substantially over the last couple months. You have to think that's going to filter through to the CPI data this week. And I think that gives the market that ability to have a little bit more risk on before we see maybe some downside in the next few months.
Hey guys, welcome back to Library of Wealth. Today we have Chief Market Strategist Gareth Soloway, who believes that Bitcoin is going to increase faster than most investors realize. He reasons that if the Fed holds, then we will begin to see inflation numbers and commodities go down, which will cause Bitcoin to go up. Soloway points out that so far, all markets, including Bitcoin, have had an expectation that CPI numbers will decrease. But he warns that if the CPI numbers go back up, there will be consequences to the market that will lead to a sharp decline, and sell-offs will continue to increase. Let's listen to this interview with Gareth Soloway as he predicts where Bitcoin will go in the next few weeks, and how inflation will continue to affect the market. Don't forget to like and subscribe if you enjoy what we do here on this channel. Let's get right into the video.
I think it would create a big sell-off. I think you get a risk-off trade in both the equity markets as well as the crypto markets. And again, the idea is we already got a stronger than expected jobs number. If you
Mhm.
couple that with higher inflation again, the markets are going to say, "Oh my goodness, the Fed has to do 75 basis points in September." And who knows if they can even stop going into the midterm elections at that rate.
Right.
So I would be very surprised if that happened. But if it did happen, you're looking at a big sell-off, especially because the equity markets and even Bitcoin have rallied over the last couple months, especially since the last Fed meeting when the Fed was much more dovish, right?
Right.
So that alone kind of is building in the fact the markets have been building in this idea that those CPI numbers are coming down. If that doesn't happen, watch out below. Yeah, I think that might be the catalyst to push us to that 25.5 level. So I wouldn't be surprised if the initial reaction is people's kind of breathing a sigh of relief, saying, okay, we're past this nasty storm. I mean, granted, it's still inflation, right? So it's not like inflation's negative or down to zero, but at least we're not seeing higher numbers. And I agree with you, the lagging indicator of jobs. I mean, I can't, I mean, I'm sure you've talked about this, but like every day I see a new big mega company reporting new layoffs. And so
Yeah.
even though we had a strong jobs number, at some point, all these companies laying off people, it's going to filter through. My guess is the next jobs number, we start to see that. And that's one more signal that the Fed probably has to take a slowing approach to raising rates. You have this period where the idea is maybe the Fed can generate a soft landing, and that's giving these asset prices. We're seeing the stock market having quite a monster rally off of its recent lows. Bitcoin hasn't had a monster move, but if you look at Ethereum's had a huge move off of the lows as well. So I mean, the idea is the soft landing keeps us from going into recession. It keeps the Fed from really tightening too much more. But if you get this scenario, and this is what I think is going to happen, is I think you're going to see an economy that slips into a recession, then a worse recession, and the Fed, again, the inability initially to save the markets is by printing money like they have in past recessions is going to be very, very problematic, and it's likely going to trigger a domino effect into a worse recession. Now, at some point during this worst recession, probably in 2023, you're going to see the Fed say, oh my goodness, unemployment is now at 10%. with a recession, you usually see a reduction in inflation. Maybe inflation's come back to 4%, and they're going to say 10% unemployment. We have to start printing again, or at least lowering interest rates to stimulate growth and get some of these people off of unemployment. And that's going to be, to me, that is where you see the pivot in Bitcoin from a risk on or risk on asset to actually becoming more like that gold and starting to take off in those printing money periods.
Soloway believes that the economy will decline into a worsening recession, and ultimately the Fed will begin to print money again to compensate. He predicts that this printing will create a domino effect that will lead to an even worse recession. This decline in the economy will in turn create an opportunity for Bitcoin to increase and essentially go from being a risk-on asset to being comparable to gold.
I'm going to play the conservative side, and I think Bitcoin is the play here. Ethereum's already over 100% off of its lows, and I think, again, Ethereum has that higher beta where in market bounces, it's going to do more, but then in market bear markets, it's going to lose a lot more as well. And because I still think we have that leg down, I think if you had to choose one, you want Bitcoin because, again, it has the stability, it has relative stability to Ethereum. Now, longer term, that's the better question, right? I think that, again, you'd probably want some exposure in both. So you cover both bases. You have the use case of Ethereum and the Ethereum network, and then kind of the digital gold where a lot of institutional money will flow into the Bitcoin, Bitcoin investments. So I think in longer term, I like both of them. I think I would generally say to people to be careful with other cryptocurrencies because, we see, if you look back 2 years ago, a lot of the ones that were in the top 20 are no longer in the top 20 of market cap. So there are ones that are replacing, like Solana wasn't around that long ago. Avalanche wasn't around that long ago. And so there's still a jockeying for what the third and the fourth and the fifth will be, as if you're looking at the blue chips. So I think if you're looking out long term, you don't know yet, but I would stick with Ethereum and Bitcoin as your investments for the longer term right now. It certainly is very tricky for kind of a retail investor because, again, picking tops and bottoms is extremely hard. It's taken me, I've been a trader for 2 decades now, and it certainly didn't come to me in the first decade. It came to me more in the second one. Now, having said that, I do think that the retail crowd can start to at least look for certain signs that make them feel uncomfortable. And just like you dollar cost average in, there's nothing wrong with dollar cost averaging out in a way where you take a little bit off the table. And what I would say to the retail crowd is, look for signs of mass hysteria. And when you see that, when you see everyone, when you go into the bagel store or the pizza place and you got the guy behind the counter telling you he just got into Dogecoin or he just got in, those are signals that as a trader, you can't get excited by, you actually need to get fearful by. And so again, I'm not saying you necessarily want to say, oh, I'm going to dump my whole position, but what's wrong with taking 25% off when you see those signs and then potentially rebuying at a lower level? So I think dollar cost averaging in is great. And I also think taking a little bit off the table, like I say to all the traders that I trade with, no one went broke taking a profit, right? Worst case, you might not have made as much, but at least you locked some in.
Soloway advises that there is more stability in Bitcoin in the short run. He warns that when looking at cryptocurrencies, it is important to consider what the various cryptos were doing 2 years ago, and take note of the ones that have recently appeared or have fallen off. Soloway believes that in the long term, it is essential to hold both Bitcoin and Ethereum. He also believes that right now is the time to consider taking 20% or more off the table to reduce loss while holding the rest and watching for a new bull market that you can play a part in. What do you guys think about Gareth Soloway's take on the markets? Do you agree that it's a wise time to take a percentage off the table? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.